I just wanted to make another video showcasing exactly how the market was set up, top down, and what I also refer to when I say that on today's brunch break setup. Now, I have to be completely honest, I don't trade this way, but I also have to be honest when I say this, why it's really intriguing me at the moment is because Tom is making a silly amount of money. However, I am not distorted and oblivious to the fact that it is all evened out. Like he says, he wins about 50% of the time. Uh, it's not always sunshine and rainbows as it has been the last. I'm not going to put a date on it, but yeah, for the recent past, it's been quite impressive. So I wanted to go over exactly maybe obviously at the end of the day what influenced the price and market to move the way it did. I don't like just to digress a little bit. I don't like to say the way the price moved. I like to refer to the market, meaning the best bid, best offer, meaning the highest price that's best bid, the highest price that's best offered. Obviously, what I'm referring to there is the futures market, but the CFD platforms such as Forex.com derive their data from the futures market. So basically, however market participants interact with the prices, what are best bid, best offered on the futures market, meaning Eurex in this case for the DAX, is what will directly influence what we see depicted on our charts. So I'm sure I don't really want to open this just in case. Okay, good. So I can see that. So I'll just open up that guy's chat. So that's okay, because I didn't want to open Andrew and FX's Discord or whatever, and then possibly, oh, you show my Discord. So, anyway, yeah, I just wanted to basically go over exactly how the market was set up, top down. So just basically conducting a top down analysis of how the market was set up as of today's European morning trading session. I'm aware that it's quite glitchy. So what I'm gonna do is I'm gonna close this. Yeah, fucking hell. Close that because that's taking up a lot of memory, and then we're also gonna close, or rather, I am going to also close Discord. Because this video is solely going to be going over exactly how the market was set up as of the most recent bar closes relative to all the time, relative to the wide array of time frames I analyze prior to the given real-time day that I'm focusing on's specific key time period during the day. And by the way, I'm making this video spontaneously too. Because I like after I go to the gym at 10 if I've got the morning free. After I've finished trading for the morning, I don't get many trades, but I finish max 10:15. I go to the gym for an hour and I sometimes run after. I'm always back by about 12, 12:10, 12:30 ish, and I'm sat back at the charts. It's usually about 12 ish. And anyway, I like to then look at Tom's trading Telegram channel, and he's just been making like such consistent money with this brunch break. It's quite impressive, I have to say. Like, even like I don't trade based on like absolute black and white mechanical strategies. Like, for example, let's just say this is the 9:30 bar, aka the brunch break bar. I'm aware it's a 4-day chart, but let's just say it is. The market goes up about this much, just above this bar. I just put this. Market goes up just a bit above this bar, about here-ish. You're buying. You know, it doesn't matter how the market's set up. For Tom, he just goes for it. Obviously, that's backed by a heavy amount of data. Heavy amount. Which I really admire. And I also went through that when I used to trade like that, but I just couldn't get it to work. I really don't know. It just didn't work. And anyway, I found my flow approach, which solely rests on my ability to read the market of how each at-hand push that's currently in play is structured, meaning the candle quantity, the quality of each bar compressed within the current at-hand push. how that makes up the current range for the at-hand push, and then how that current at-hand pushes range compares to the previous at-hand pushes range, if I'm focused on at-hand pushes. And then we've also got the overall. So just to illustrate that, the at-hand push, hang on, I should have had this. Yeah, right, what I'm going to do is just close this and open it back up. And what I'm going to do is illustrate what I mean by like the at-hand push and the overall at-hand push. That's all I analyze, and then I'll do also look at the KI kilo range pivots, which I'll briefly go over. So yeah, like I was just looking at this thing, and I was just like, oh, like I'm not gonna lie, I probably wouldn't have looked if he had, for example, said he took a loss or took a break even. But like another 67 point. Oh well, he's actually running the rest, you know. So I was just like, oh my god. And I've seen this myself, like over the past like 4 months or something, just consistently playing out the brunch break. I'm just like, this is piquing my interest, but I'm too experienced to ape into sodding everything else off and jumping straight onto something. I wouldn't dare do that. And also, I know that I cannot trade well like that. I have to, if I was to trade like that, which even like, if I was to trade like that, I'd be doing what I'm about to show now, like doing top-down market analysis. So first of all, this for me would be the at-hand push, and I like to just do this, delineate in the at-hand push, and then this would be the overall. Like that. So this would be the current overall at-hand push and play, and this would be the at-hand push and play. The previous at-hand push, I would say, so we'll just get rid of this, would be, for me, well, it would be this technically, you know, and I would also consider like this too. So I would consider that, yes, this is the previous at-hand push and play. This is kind of just like a minute pullback, but I wouldn't really classify it as an at-hand push. I would just like acknowledge like this, the second last at-hand push that was in play. It expanded above the previous at-hand push, which was also the overall. Like you got the overall, yeah. So this would be the overall and the at-hand push itself, and then this is kind of like a further ensuing at-hand push to the upside, just ensuing above the structured range left over of the previous at-hand push, which had also closed in the entirety of the previous at-hand push to the downside. Relative to this would be the relative previous at-hand push to this push, and then a further ensuing at-hand push just unfolded. So the market's quite extended, but then it doesn't matter about that, even if it's in overextended territory or in an area where a reaction could take place. What matters is how the at-hand push, as of the most recent bar close, is structured relative to the time frame being looked at, and also however it's set up at that moment, how next step higher time frame chart perspectives are set up too. Meanwhile, this time frame chart perspective is set up the way it is. So anyway, just to get down to what I was going to show is just basically, like, I haven't even looked at it yet, but I just thought I'd just make a YouTube video too, showcasing exactly how the market was set up as a Tom Hougaard's brunch break signal on the 25th of October European morning trading session. So anyway, the 4-day bar closed on Wednesday. So yeah, amongst the existing structure of the at-hand pushes range, which was nicely overextended to the upside, healthy candle quantity and quality per bar compressed within the at-hand push. Remember, it's also an ensuing push above the previous at-hand pushes range, which itself referring to the previous at-hand pushes range, meaning this one, it had also closed in the entirety of its previous at and push and traded above the high. So it's just kind of extending up to the upside. And then also, if we just look at the weekly, as of the most recent weekly bar close prior to the bar that's currently in play, it's kind of iffy. And then if you just look at the 2 week, yeah, that kind of looks bullish to me. Doesn't look done pushing to the upside. Its angle, it just doesn't look done pushing it. It's like there's no curvature. Like it just doesn't look done pushing, to be fair. Even though it's in an area where it would be likely to have a reaction, what matters ultimately is how the arm push is set up and whether it is set up for reaction to point hinting towards a reaction potentially unfolding on the basis of how the arm push is structured. It's solely dependent on how the arm push is structured, and this is structured for more upside. If we look at the most recent monthly bar close, which the current in play one doesn't actually have much left, but like this doesn't look done either. It just looks like it's gonna push to like form its wick and then push to about 20k. So maybe it's a bit less, just below, which would also figure too. Makes sense, meaning. Right, so then if we can just go to the 3-day bar relative to forex.com's chart closes on Thursday. So remember, we've got the 4-day, nice bearish bar close amongst it, but we'll also have to remember how the initial time frame being analyzed. In this case, the 4-day is set up. Meanwhile, next step higher time frames that are set up, and they are set up for upside. So we'll have to kind of take this with a bit of a pinch of salt. So it is likely that relative to the 4-day and 3-day, the market's gonna head lower. I say going to, I should say likely, because at the end of the day, nothing is definite. But anyway, yeah, where this at-hand push is structured the way it is, amongst its previous at-hand push to the downside, it's well above the high of the previous at-hand push's range, and it's like a healthy counter quantity, well-structured push compared to the previous at-hand push. Now, overall, it's just like the overall push, I would classify it from this low to this high. So just to briefly illustrate that, like this, I would classify this as the overall at-hand push relative to the 3-day. But then the at-hand pushes, I would go like this, so just follow my cursor. So yeah, and then this at-hand push kind of looks done based on how this bar closed the way it did, and then where this current newly emerging at-hand push, maybe newly emerging at-hand push is unfolding the way it is, compared to its previous at-hand pushes range, meaning like this low, from this low and high, it's got a lot of range left to play, right? It's got like all of this, and they could even push to like here easily. So and then I would also maybe look here too, but we'll see how that looks like as of dropping down the time frame. So the 2-day bar closes on the Friday, and it closed in a bit of a weird fashion. So it opened here, presumably got traded up, and then got traded lower, and then got traded back up, or it either went down, up, and then like this, and then that would be figure for more upside. But well, it's still kind of at the higher proximity. Like this at-hand push looks done, like this one. So I'm just gonna actually mark this up. So we've got this. I'm just gonna leave it like this, and then I'm also gonna delineate that with lines. So like this. Okay, so 2-day. So this would be the structure of the, like, technically this is the previous at-hand push, right? Because like, and it looks done. So and the reason why it looks done is on the basis of how this at-hand push is structured compared to its previous at-hand push, which would be this high to this low, and then this push extended to the upside. It still probably was likely to keep pushing higher briefly. I say briefly because it's in an area where a reaction could take place and you could expect to see some resistance, and that is what happened based on this bar close, as of this bar close. But then just on the basis of how this at-hand push is structured the way it is, and then how this bar closed, suggested that this at-hand push to the downside is done, and a newly emergent at-hand push is in play now, and it's at the higher end region of this at-hand push. You know, it would, if this bar closed the way it did with some structure like down here, well then, yeah, that would also hold more significance than this does, but this does still hold some significance based on how higher time frames are set up, meaning the very higher time frames. But it's still iffy considering it's at the higher end range. You know, this at-hand push looks done. It doesn't look, it's a newly emergent push. It's not sufficiently structured. It is possibly likely. It wouldn't be far-fetched to see a further retracement. We also have to acknowledge that we're right at the overall highs too. But anyway, daily, just ignore that. I guess that is also good to read, to be fair. But yeah, so I'm not going to draw any more lines. But yeah, you can see this at-hand push, this at-hand push. You can basically see the 2-day at-hand pushes more granularly, if that's a word, more distinct. And you've got this at-hand push, and then you got this at-hand push, which compared to its previous at-hand push, still at the higher end range. Like I said, I know it's come down into this area, but pardon me. You know, it's a bit iffy, this. When a time frame is unclear, that's okay. What you do is you just acknowledge how next step higher time frames are set up and what direction they are poised for, which the 2-day, to be fair, was unclear, to be fair. So what you do is you then see how next step lower time frames are set up, and as a result, the direction that's likely to take hold and take place over a time duration relative to the next step lower time frames, which would be in a shorter time frame horizon, which would then influence how the next step higher unclear time frame would naturally push in. So that's why I like to use a wide arsenal of time frames. It's literally like, it's all you need. You don't need any of, I guess, like these lines and stuff and fibs, they help you make of how like the market is set up as a whole, like you, in a better way, in a more easier fashion. They aid you to coming to a conclusion, but you don't need them. And anyway, like you could do them yourself if they didn't even give them, you know, on the platform. So anyway, yeah, look at that. That looks good for upside based on the short-term structure. You know, you got a sufficiently structured at-hand push to the downside relative to its previous at-hand push. Like this pushes at previous at-hand push, which would be this. It's well structured. It's below. It's closed in the entirety of this range. It's right below the lows of the previous of this relative at-hand push's previous at-hand push low. And then the way the market kind of formed, but per bar, auction-like per each bar, suggested that this at-hand push was possibly done. And then the way this bar closed pretty damn nice for upside. You know, you got you were up here, you went like this, and you'll also be more clear on higher time frames. Now, presumably, like that's pretty strong. Like if this bar got traded all the way down and got traded up like this, it's likely to keep going up at least to this area. Remember, this is all based on my experience too. It's I don't have some crystal ball, and I'm also not just spouting my mouth. I'm not, like I am, but I'm not just spouting randomness. It's all based on my experience. So, and my approach too. So you got this. You got a bit of a wick rejection with the daily. Was this a 12-hour? Oh yeah. Oh okay. So this is a 12-hour, right? I wasn't paying attention. So the daily's unclear. The 12-hour suggests higher. The 9-hour is a bit iffy, but you've got a nice wick reject kind of close ish, which does hold further significance on the basis of how the 12-hour set up. This kind of looks good for downside. It looks a bit iffy. Yeah, iffy. Same as 8. 4 iffy. I do acknowledge the fact that you've got like this structure going on, like high of the arm push, low, high, nicely structured above, close in the entirety of the previous arm push, nicely structured, came down, kind of already pushed to the downside into this region, whilst the 12-hour is bullish. But still, the previous bar close to European Modern Trading Session was not of the sort that you would want. Now this is, whilst 12-hour is set up the way it is, so you got this structure going on, so like your high, your low. When I say this, I'm referring to the high and low of the at-hand pushes ranges. high, low, so this would be entire range, then low, high, so yeah, and then came down, wick this low, nice wick reject bar candle close. Look at the 2 hour, how it's set up for a kill zone. Now this is, actually no, this is not looking good for longs. This just looks like it's going to push lower. And we also have to acknowledge where the market is actually situated relative to the daily chart timeframes in play at ambush, well, relative to where it is situated relative to its previous ambush, which is situated kind of at the highs. So the reality of the price of the market's unfolding at relative to intraday timeframes, it's kind of still sat at in like a dodgy region where you want to be treading carefully. Now Tom does acknowledge, so this looks good actually, but Tom does acknowledge higher time frames and stuff, but not to the extent that I rely on them. Like for example, I was looking for this on the euro today. I was looking for this region based on higher time frames, and then for the same for the pound, I was looking for a retrace from where it was situated at as of 7 a.m. to this region, and then I would have to look through the time frames again, but it would either be a 1 hour nice bar close or 15M, and I'm pretty sure it would have been a 1 hour possibly, and then obviously then a sufficient playable range to play, and then a 15M intra-session liquidity sweep. I hate saying it like that, but that's just what I call it. And just like Tom calls his strategy school run, it just and why he does, it just helps him like immediately like remember, so it's kind of, it's a poor way of wording it, but like remember like what it's referring to. Like, all right, yeah, the first two 15M bar closes, and then above bracket the high and low, you know. So you wait for the first and then the second, and then after that you go the high or low, certain amount above and below, and that's just how I call it. I actually specifically refer to it as ISLQS, yeah, is locus, yeah. Instead of saying intra-session liquidity soup. So we'll see that the way the 1 hour is set up, it does look actually okay for longs, but like it's like, when would that be invalidated, you know? Like, it's like this would be the at-hand push range. I would even be lenient. I would rather pull it from this high, but I'm just going to be a bit lenient. And then so to be fair, I'd probably want to see like a nice bar close, like a nice 1 hour bar close. So there we go. So then you'd be dealing at 9. And then you do also have the 12 out in play, right? But the thing is, right, this is what I was going to get at. The way I do my analysis, there'd be no point in me specifically focusing on a specific bar. What I would do is I'd drop down, like I will, drop down onto the 15 min, which is my minimum time frame that I go to, and I would simply wait for a sufficient anatomic bar close, meaning like the anatomy of a bar is the open high low close or open low high close, and I'd wait for a nice bar close like this for longs, and then a nice bearish bar close would be like this, like this, no, not this one, sorry, like this, like this, like this. You get the gist. And then a nice bull bar close would be yeah, that one. So I'm really skimming the charts here, like this. That one's iffy as hell. That would not be nice to be shown. Of course I'm referring to if it formed on the 15M. And then yeah, there's no more. I'd probably go lenient and be lenient with this and go for this. Yeah, that's good, to be fair. But remember, I'm referring to like it's applicable to all chart perspectives. But anyway, what I'd do is I'd be then dropping to, as of how the market's set up, as a 9, and I'd be simply waiting for, like what I said, a nice 15M bar close. So as we see, right, and this is also applicable to the most recent bar 15M bar close to the confirmation bar. So like I said, I wanted to see a nice 15M bar close. That bar close can also be on the most recent bar close to the bar that oh no, sorry, I wanted to see a further nice 1 hour bar close, just a nice 1 hour bar close. It doesn't have to be sufficient anatomic, it just has to be nice, and then also not closing the entirety of the 1 hour arm push range, of the arm pushers range. Yeah, that's left to play as of 7 a.m. right? So we did conclude that the direction is up based on the higher time frames. But like you see how this bar also confirmed at 9 when the nice 1 hour bar close confirmed, which was at 9. You get this bar. This is literally textbook. And basically what I do for my stop loss is I just like to firstly line up what the equivalent of 10 pips on EU is. And so how I do that is I divide the price that I'd be buying at. Obviously, I would be including a bit of spread. But I'll just include where my position tool is, so because it doesn't really matter. It doesn't have to. Nothing has to be fixed. You know, you learn this as you go. But so that 19,428.3 divided by 1,000. So this is the equivalent 10 pips, and I line that up. Okay, so I'm definitely not going for that. So I'd probably just times that by 4. So 19.4 times 4. And then I'd just line up what that looks like, and if it looks decent, I'd just stick with that. So and then as I'm also lining that 77 pips up, I would also then look for possibly a better placement. So I wouldn't want it there at this low. I'd probably want it about somewhere like just a bit above this low, maybe some half of this. So even about there. But then again, you don't have much range to play, right? You just don't. I know you would have hit your target. So it is a bit iffy. Like I also like to like maybe test what doubling looks like. So 60. Yeah, I think I would go with something like that. Yeah, I'd do that. So still, you're not like. You're still targeting more than the playable range, which is iffy. Because obviously, as of this moment, yeah, this bar's printed because you're dropping down at 9 once the nice 1 hour bar closes. So just to show that again. So as a 7, based on how all next step higher time frames were set up, it kind of pointed for lower, but the 12 hour pointed for higher nicely. Short term relative to 12 hour, but obviously short term relative to 12 hour, like that can be like 6 hours, you know, so it's relative to the time frame chart perspective being analysed. And then anyway, so just to confirm that possible bullishness could unfold, and it wasn't just going to melt, because you know what these indices are like. They're a bit different to euro and euro, like your main forex currencies. They are definitely a bit differently. Participants definitely trade them a bit differently, which is okay, and you just have to adapt. But I wanted to see some confirmation first relative to 1 hour. So, and it was also based on like how like the market had already pushed relatively, even the 4 hour, you know, and then also with the 12 hour setup the way it is, for momentum to primarily push in over that bar, and then how that bar may form, like the subsequent in-play bar as of the most recent bar close that we would be analysing, how the 12 hour chart perspective setup, how that anatomy of that bar may form, like forming its wick, and pushing to the upside primarily, because that's what we established was the most probable direction. This is setting up decently, right? So anyway, like this bar was not nice. This bar was. You did have some playable range, and then obviously as of 9, you would look at how the most recent 15M bar closed as a 9 closed like, and it closed very sufficient bullish, very nice. If it hadn't, you wouldn't have been in a position, because the entirety of this playable at-hand playable range was closed in, and no, I mean. Like, I'm just saying, I was about to say, and no other sufficient bar even closed. And even if it did, even if this bar formed just a bit higher, I probably wouldn't have took it. It's just right, just. But if this bar formed like here, no, we've literally got like this much left. Like, I just wouldn't even take it, like, regardless. I just wouldn't. So, anyway, yeah. even, but the point is like this is kind of, it's very iffy. It would, if this bar closed like down here even and there was a lot of playable range left to play, it would depend on how recent nearby bars had auctioned like, or rather more specifically put, it would be contingent upon how the market had auctioned like over recent past time frames that the chart perspective is set to depict, and how as a result those bars formed like, meaning like, did they have nice wick rejects like multiple and then this bar formed. So it has to be a bit of context behind it. If it's contextually fitting, then yeah, sure, this is just right. But like if it's formed like this, I know this bar's sufficient, but like if you get an iffy anatomic sufficient bar close where it's iffy in regards of whether is this sufficient anatomy, is it not? It's like just above the borderline, and then the market's been really impulsing lower. Even though it's well overextended, it's closed in the entirety of its overall arm push relative to 15M. It's traded below, it's well structured below the previous overall arm pushes range low. It's still a bit iffy, like immediately coming off of a steep downtrend relative to 15M, and then a kind of iffy anatomic sufficient bar closes. You would probably wait for the next bar, and then that might result in you missing out on the move. It doesn't matter. It does not fucking matter. Like, you only need 2 trade setups a month to make a nice bit of money. Of course, it would take a bit of time to get funded and stuff with that, but not every single month you're going to be getting 2 trades a month. Sometimes you'll get 7. The most I've seen is probably around that, and it rarely loses this approach. I hate saying that and stuff because I sound like some YouTube guru, but I mean, I'm going to put every single trade that I put on before and after the fact, you know. I conclude the direction as a European modern trading session, or the trading session I'm looking to trade, based on how time frames top down are set up in regards to the at-hand push, and then I simply see how that at-hand push in play is likely to keep progressing like. Is it likely to keep pushing? Is it not? That's all you're determining. And then you can better determine that, or aid the process in determining that, by seeing how your previous at-hand push is structured and how the current at-hand push in play compares to the range of that previous at-hand push in play. Where's it situated amongst that, right? And that better aids you in your process of determining. So anyway, there's someone knocking at the door, so I'm going to leave this just here. But as you see, this is how the market was set up, as in my terms, as of European modern trading session, which also falls under basically the time when Tom went long with brunch break.